Hello, welcome to the European Open Briefing for Thursday, November the 10th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we have quite a sharp reversal today following that big sell-off yesterday after the surprise win by Donald Trump of the US presidency. We saw both the dollar and equities around the world bounce back quite strongly. The dollar is back about 105 yen, but we're also seeing a spike in US government bond yields, and this came after the incoming president's acceptance speech, where he signaled that he will likely increase spending on infrastructure and in general expand fiscal policy, and this has boosted expectations of inflation, and that also has helped the dollar higher. In other news this morning, the Reserve Bank of New Zealand cut interest rates by 25 basis points as was expected. So let's begin with the dollar yen pair. We can see that big reversal yesterday, later on yesterday, and we're seeing today it's holding pretty much close to around 105.50 yen. And so basically we have this renewed optimism now that the Trump presidency will not be so bad. Markets were calmed after Trump, in his victory speech, he said that he didn't mention any of his radical policies on immigration and so on. He talked about united country, and also he mentioned that he wants to boost growth through fiscal policy, and that has given a bit of a boost to risk sentiment, and that's helped US stocks. They closed up 1% yesterday. We had a strong rally in Asian stocks today, particularly in Japan and in Australia. European equities also were up sharply yesterday, and they're expected to open higher today as well. We also had some comments from San Francisco Fed President John Williams. He basically said that he doesn't expect the US elections to affect monetary policy, and he basically reiterated that the argument for gradual rate increases still makes sense. Fed is still expected to hike rates. We did see a big drop in the odds of a Fed increase briefly yesterday, but those odds have still bounced back based on the futures, Fed funds futures market. Also, we have some measures of inflation expectations pointing to higher inflation in the US over the coming years, and also we can see here in the chart that this is the 10-year yield on US Treasuries. It's spiked up quite sharply. It fell here, we can see, to around 1.70%. It's currently above 2%. That's the highest in 10 months. And that's it's an indication that investors expect US incoming administration to boost fiscal policy in the US. If you look at the dollar versus the other currencies, the dollar index, again, we can see it more than recovered its losses from yesterday. It reached a 1.5-week high of 98.70 late on Wednesday. It's currently around 98.50. The euro is back below $1.10. It's holding just about $1.09. The pound is doing a little bit better than the euro. It's currently holding about $1.24, and that's because people see that under Trump, the UK is much more likely to sign a free trade deal once it leaves the EU, whereas if you recall, Obama had said that the UK would have to get back at the back of the queue before it begins new trade negotiations with the US, and that's somewhat helping the pound. Let's move on now to the Reserve Bank of New Zealand. They cut rates by 25 basis points to 1.75%. That's a record low. Inflation in New Zealand is still very low. It's currently just about 0%. That's well below the central bank's target of 2 to 3%. But in its statement today, the RBNZ did say that they expect inflation to start rising from by the end of the year onwards. And so basically that's signaling that rates may not be cut further beyond the current levels. Although there is some skepticism to that, because in the statement the RBNZ also said that the current exchange rate is too high, and that pressured the new Kiwi this morning. It's slightly down at around 0.7270. If you look at what's happening in commodities, in gold, we can see that big spike up yesterday after the elections sent panic across financial markets, boosting demand for safe havens. It reached a 6-week high. Now it's back down to around 1,285, just above that. So we can see that basically that's as a result of the reversal in that risk of sentiment we had yesterday, and we've got renewed optimism in the markets, and that's also helping crude oil. Crude oil is up despite the fact that US crude oil inventories rose much more than expected, according to yesterday's data by the US Energy Department. And the risk appetite is also helping other commodities, particularly iron ore and copper, and that's mainly as a result of this speculation that if we do have infrastructure projects in the US, that will boost the commodities of construction-related commodities. Let's move on to the economic calendar. We can see earlier today we had machinery orders out of Japan. They were much worse than expected. Machinery orders fell by 3.3% in September versus expectations of a fall of just 0.8%. On a year-on-year basis, they were still up 4.3% though, which was above expectations of 3.5%. But there was not much reaction to that data, given that much of the attention now is on the US elections. We did have some French industrial output data that was much worse than expected. We are seeing overall fairly negative industrial output data for September. We already had bad data out of Germany. For the rest of the day, it's not looking too busy. We've got the weekly jobless claims out of the US, and that's pretty much it, as markets pretty much are still focusing on the aftermath of the US election. That's it from me. Thank you very much for watching, and have a great day.